Good evening, everyone. I'm pleased to welcome you all to today's webinar. The host for today's webinar is Mr. Abhishek. The speaker for today's webinar is Mr. Abhishek A. Rastogi, who is a partner at Taxmann & Co. Mr. Abhishek Rastogi is a distinguished voice in the field of taxation and has argued about 300 petitions in different courts across the country. Towards his professional recognitions, Mr. Rastogi has to his credits various awards like Economic Times 40 Under 40. He has authored dozens of commentaries on indirect taxation. I'm pleased to welcome Mr. Rastogi to now begin this session.
Good evening, everyone. I welcome all of you to this Taxmann webinar, and our endeavor today will remain to take you through a lot of these budget changes with respect to indirect taxes. Now, a lot of people are saying that this was a lukewarm budget. There was nothing in the budget announcements. But I think we need to go into detailing. And that's what has been happening for several years now. While in the budget announcements, there may not be much spoken things about. But yes, when you go to the notifications, when you go to the finance bill, there are a lot of these changes. And today, our endeavor will remain to highlight some of these changes in the Customs and the GST Act, which are relevant for industry, which are relevant for tax experts to understand. I understand that, indirect taxes is a little boring subject when it comes to, especially on a weekend. So we will try to make it a little more interesting in some way or the other. So let me first of all go to what were the 10 budget misses. And this is very important because this budget, we were thinking that the endeavor will remain to reduce the litigation, to address some of those issues which are there in court, or some of these issues where industry is actually feeling the pain. So what were these 10 big misses? I think ocean freight. They could have clarified or have proposed some sort of an amendment with respect to ocean freight. That's one. Intermediaries and place of supply of this intermediary services. There could have been a clarification on the intermediary per se, or there could have been some amendment with respect to the place of provision of intermediary, clearly a miss. Constitution of tribunal. Today, we are living in a country with so much of litigation all across GST, different states, different issues, and different aspects which need to be addressed. The formation of the GST and the constitution of the GST tribunal has not happened. So I think there could have been an announcement on that at least. Anti-profiteering. We know about 100 of such petitions are now jointly heard before Delhi High Court on the constitutional validity of anti-profiteering provisions without any presence of methodology. So we were expecting, the industry was expecting some announcements with respect to some changes in anti-profiteering. That was clearly a miss. Judicial member for advanced ruling authorities, appellate advanced ruling authorities, clearly a miss. It appears very clearly from the orders which have been passed by the advanced ruling authorities that these are tilted more towards the revenue side. That may or may not be right, but yes, presence of the judicial member in these advanced ruling authorities would certainly boost the confidence of the industry. That was a miss. Cryptocurrencies, big announcement, huge announcement. Crypto assets, everybody was waiting. There were announcements with respect to 30% of tax on crypto sales, on 1% of TDS, and so on and so forth. What happens when there is a gift? What happens when there is a transfer? And what happens when there is a loss? But clearly the miss was with respect to the GST announcements on cryptocurrencies. Will GST be applicable on cryptocurrencies? Yes, the finance minister thought that let's make direct tax applicable on cryptocurrencies, but clearly a miss with respect to GST on cryptocurrencies. Power to arrest. There have been more than 6,000 arrests all across the country in a couple of years with respect to fake invoices, with respect to constitutional validity of the arrest provisions. Clearly a miss. The CRPC provisions being made applicable to bailable and non-cognizable offense, industry was waiting. Article 21 comes into play when these questions arises, and hence it was the need of the hour that the provisions with respect to arrests are explained, clarified, in which situations the reason to believe by a commissioner can be invoked must have been elaborated, documented, clarified, or perhaps even some sort of an amendment to section 69 read with 132. Clearly a miss. Blocking of credit, we know for a fact credit have been blocked by way of several provisions in section 17.5. Industry was looking for certain aspects to be either clarified or amended so that the objective of GST is not defeated. There is a seamless flow of credit which happens, and hence there was an expectation that section 17.5 will see some amendments. Clearly a miss. Litigation, there are recurring issues with respect to litigation which are happening all around. So all of these aspects with respect to litigation, if you see from the direct tax perspective, there is a clarification that with respect to these recurring issues, there will be appeals by the revenue only in certain cases. They will not be allowed to go to the High Court with respect to those recurring issues for which the matter is sub judice. Relief has been provided on the direct tax side with respect to such litigation issues. Clearly a miss on the indirect tax side. No relief with respect to recurring litigation for GST or for customs. The relief comes only to the direct tax payers. So clearly a miss. Last but not the least, there is a clarification and a notification with respect to alcoholic liquor license. A good thing to happen, a welcome move. But what is a miss? The miss is with respect to the casino license fees and the mining licenses, and all of these taxes or duties, or where these government authorities are collecting this amount as a sovereign function. So what happens to the taxability of those? That was expected from the budget, because there is huge litigation. Can there be a tax on the sovereign function of the government, or by way of a levy? Is there a quid pro quo in such situations? Clearly a miss. So I think there were certainly a lot of things which could have happened in this budget. Perhaps people were thinking of some announcements for petroleum products, rate rationalization, and so on and so forth with respect to GST as well. But GST rate rationalization can happen even after the GST Council meetings. So I would not call that a miss right now. But these points which industry thought would address larger issues with respect to the stakeholders in these sectors, was clearly a real miss in the budget. So let's now understand that what budget has given this year. And I think I will divide the entire presentation into two parts: customs and GST. Let's start with customs first. We all are aware of the landmark decision in the case of QnA India. And that landmark decision basically goes into the details that whether DRI has the power to issue show cause notices and all. In fact, I am arguing about 24 of such writ petitions, not only on the show cause notices, but also on the power to issue summons. Who is the proper officer to issue summons? Who is the proper officer to conduct search and investigation? Whether Panchnama is to be given during the course of the investigation. When these summons are being issued, what is the duty of the officer? What is the duty of the person to whom these summons are issued? Can you issue these summons at the first instance? Is there a way to monitor issuance of these summons? If there is already a cooperation with respect to investigation in terms of data, documents, information, technical, non-technical, factual, etc., then can you issue the summons to the managing director of a company? Was the question mark which completely shackled the industry for several years now. So what has happened in this budget, at least on the customs front, is subsequent to the QnA India decision. A lot of these questions have gone to the court, that who is the proper officer? Is he eligible to conduct the inquiry? Is he eligible to issue summons? And of course, in Canon India, the issue was limited to issuance of the show cause notice under Section 28 of the Customs Act. Now, what has happened in this budget? To resolve the controversy or the decision of the Supreme Court, which was there in favor of the taxpayers, that DRI is not authorized to issue these summons, there are these plethora of amendments which have come in. And what these amendments basically are saying, a validation section has been provided, which provides that all actions taken prior to the date to this amendment to be valid by way of a deeming fiction. Now, which means that Canon India has gone for a toss. The entire controversy with respect to who can issue the summons, who can issue the show cause notice, and so on and so forth, which people were relying on the decision of the Canon India, will now have to be tested in light of the retrospective amendment. I would not call it retrospective. I would actually call it retroactive amendment. So what is the point today? The point today is, with respect to these show cause notices issued by DRI prior to this amendment, and what happens to those show cause notices which are issued subsequent to this amendment once this enactment happens. So what happens in those two situations? With respect to the period going forward, certainly the amendments and the proposed amendments and the intention of the legislature will come into play. Will have to be seen that whether the proper officer now would be DRI. Now, there are dual powers which have been given for the same set of a problem. So the DRI does the investigation part in the beginning, and thereafter would hand it over to the jurisdictional officers. So for the same alleged offense, both DRI and the customs authorities have been empowered. We have no issues till the time the law provides for that. But now what happens with respect to those show cause notices which were issued in the past? If there is an amendment today to address the issue of Canon India, the issue which is most pertinent to note today is that when there is already a decision of the Supreme Court to address a certain issue or a problem, is legislative amendment giving a retroactive effect is good in the eyes of law? And that's where our battle will now arise with respect to this amendment. We will have to perhaps go to the court again to check the constitutional validity and test the constitutional validity of these amendments which are giving retroactive effect to certain of these provisions. It is also seen that the officers of custom causing an investigation, inquiry, and audit to relay a report to such proper officer. Now, when it comes to the provisions going forward, we have no issue. We will have to see whether there is any chaos which happens. Is it hampering the ease of doing business? Is this against the intention of the legislature? Or are these provisions amended in the larger public interest to curb the bad practices of tax evasion or to improve the administrative part of the customs officers? Now, if the answer is that all of these changes have happened in the larger public interest and helps to reduce and mitigate tax risks, leakages, etc., I think there is a weak case. But if it is not, then of course, even the dual power or multiple people addressing on the same issue. Imagine a person going to the DRI sitting in Chennai when a person is based out of Mumbai, going to Chennai to answer to the DRI queries, and also going to his jurisdictional officer on the Mumbai port for addressing the same queries at same point or a different point. Will that lead to hardship? Will that be against Prime Minister's Modi objectives of ease of doing business? Will it hamper the business? Will it increase the compliance cost? And so on and so forth. So I think the retroactive amendment clearly will be the subject matter of being tested in the courts. We will certainly test that. But with respect to the prospectivity of these provisions, it appears that these provisions intend to give clearly powers to two officers in different teams or different jurisdictions. So I think Canon India, one of the great decisions of the recent times, being made applicable to these retroactive proposed amendments. Will the government still think about these retroactive amendments? Because we know for a fact that when should a retrospective or a retroactive amendment happen? It must happen only in the rarest of rare cases. Only in those circumstances, and especially in tax laws, and especially when there is a Supreme Court decision which has come, the retrospective amendment must be made applicable only for such situations wherein there was a deliberate intent on the behalf of the taxpayers who were taking benefit of these provisions, and the intent was not that to give that benefit. So I think from that perspective, it is very, very clear that this needs to be tested again. We will see in the days ahead how it goes. Moving on to the second issue with respect to the customs changes, there are certain additional obligations which are required to be given, additional evidence which must be given on some specified classes of goods where generally the trend is of undervaluation. So there will be an additional obligation now on the importer to give some additional evidences as notified along with the import documents to ensure that there is no undervaluation. There will be a list of such specified notified goods on which this additional obligation will be given. So the amendment has been proposed to introduce a control and check mechanism in those classes of goods, so which is a good sign. But I think the real point also which remains is to be seen that whether these additional obligations would hamper the time for which is taken for the import clearances. That must not happen. The import clearances and the time taken with respect to these import clearances must not be increased because of these obligations. Next, with respect to the customs, is publication of information. So what used to happen, that there were some private agencies who would gather details and information with respect to the imports which is happening in India. So for instance, if cycles are being imported into India, then what are the classes of cycles being imported? From which country are these imported? At which value are these imported? What is the tax imposed on such cycles? How big is the market? And all gets determined by these import data. And this import data was used for different purposes by different businesses for different reasons. The government has now come up with the provision, and this is of course a proposed provision, that this activity will be a criminal offense, attracting an imprisonment term of 6 months apart from the fine. So I think clearly the government doesn't want the private agencies to leak out this data, this information, and so on and so forth. But of course, there is a caveat used that when this is permitted by the country, for example, it may be relevant for the government to know these details or to make public the details related to certain products such as agricultural products, rice, tur dal, and so on and so forth. So I think there the government may give the relaxation. Specific provision could be there that these information could become public, but not otherwise. Advanced ruling, we spoke in the beginning. Advanced ruling authorities, the timelines have slightly been changed. And what is the change? The change in the Customs Act is that the advanced ruling will be applicable for a period of 3 years. And if you ask me whether that is good or bad, clearly I have no answer. If advanced ruling, the objective was tax certainty, then how does it make a difference if that is applicable for 3 years or 30 years? The law says, the proposed law says that the advance ruling will be applicable for a period of 3 years. Now what happens? There could be two situations. Situation one, I got a positive ruling. If I get a positive ruling, then still after 3 years, the tax authorities could say that this ruling was applicable to you only for 3 years. Nothing doing now, no tax certainty. Either go back again or, we assess in our own way. If I get a negative ruling, then that ruling in any case is applicable again for 3 years. So it is both a beneficial provision and a non-beneficial provision. In some cases, it will give some benefit. In some other cases, it won't give the desired benefit. But I think when it comes to the advance ruling, our argument has always been on the aspect that there must be presence of a judicial member. And we will keep continuing to argue on that aspect because we somehow feel that there will be certain aspects related to law, related to the judicial system, judicial precedents, and so on and so forth, which will help the entire system. So for a moment, if you even park whether these rulings today are pro-revenue or not, today industry doesn't have that confidence. And I think the presence of the judicial member will help the industry and will certainly help my professional colleagues, both chartered accountants and lawyers, because they will be able to represent their matters and there will be more tax certainty. And if tax certainty is provided at the initial stage, then there are higher chances that there'll be lesser of litigation in the days ahead to come. So I think AAR will remain the subject matter of discussion in the days ahead. Concessional duty rules. We know for a fact that there are concessional duty rules. So for instance, if you want to intend denatured ethyl alcohol in India, it is under the category of concessional duty rate. So in the past, this product which is used for manufacturing of hand sanitizers or the resultant product is used in remdesivir, there were concessional duty benefits. These concessional duty benefits are given for the perspective that the import cost must remain less. So there are certain changes to these rules, and these have been overall for providing procedural ease with automation and electronic processing. That's a very welcome move, because what will happen by this is that the processing time due to automation gets reduced, and hence it will clearly help time to import for the importers. The next is with respect to the SWS circular, Social Welfare Surcharge Circular. What was the issue? And we were arguing this matter in several courts. Social welfare surcharge is a surcharge which becomes applicable on the basic duty. So for example, if the value of the imports is 100, the basic customs duty is 10, social welfare surcharge is 3%, then 3% becomes applicable on the duty part, which is 10 rupees. Now, what happens in a situation where duty is exempted? And we argued before several courts that any percentage which becomes applicable on zero becomes zero, because when you multiply anything with zero, that remains zero. Aryabhat taught us. Now, if that is the situation, then can social welfare surcharge be made applicable to situations where the basic customs duty is exempt? And that's when we went to several courts to address this issue. There is a circular now which clarifies that when you import against advance authorization, the basic customs duty is exempted, and hence even the social welfare surcharge will not be applicable. So anything, any percentage applied to zero becomes zero, it becomes exempted. A welcome circular from the government of India. But what has not come, what is amiss, is what happens in a situation wherein I get the exemption or a knockoff with respect to duty when I import under the MEIS licenses. And that still remains the issue. our battle before the writ courts will continue with respect to MEIS exemption which are claimed with respect to these imports. But of course, a great circular to at least solve a predominant part of the problem with respect to the imports under the advanced authorization licenses. A very, very welcome circular by Nirmala ji. My next point is with respect to the phased manufacturing program. And when I was finalizing this content with Taxmann team, I told them that there will certainly be announcements with respect to Make in India to boost the manufacturing capability of India. If we have to reach to a 5 trillion economy, of course, we need to boost the manufacturing in India. We need to ensure that our MSME sector gets a relevant boost. Phased manufacturing program is an example to boost such identified sectors. This phased manufacturing program has come with respect to the wearable devices, the hearing devices, and the smart meters. So what will happen in this is that in the phased manner, the customs duty over the period of time increases. So which means that if these are parts or inputs or raw materials, etc., with respect to your final product, we are telling you in advance, the government intends to tell the businesses in advance that these next 4 years, the duty rate is going to increase. We are telling it to you in advance from 0, 5, 10, 15, 25, 35. And hence, if these are your essential components, please import it now for 1 or 2 years, for which the duty will be less. But thereafter, please plan to manufacture these in India. And I think it's a beautiful plan. I personally feel that this must be extended to different such products. And I was talking to a friend of mine who said that we import paddles of cycle from China. I said that on one side we are sending satellites to Mars and we can't manufacture paddles of cycle. It was hilarious and amazing to me. And I think such initiatives with respect to phased manufacturing program will ensure that such situations of manufacturing paddles, when the duty rate increases, we need to support our MSME sector. We need to support these component and ancillary industry sectors, because we want this manufacturing to happen in India. By no stretch of imagination, I can't think of a situation that India can't manufacture paddles of a cycle. So I think we need to identify more such industries, more such sectors, and we need to tell the players very much in advance that please, this is the phased manner in which the duties on imports would increase. So please plan accordingly. Please ensure that you manufacture these products in India, or else pay a higher duty of taxes on imports. I think a beautiful move from the government. With respect to project import in most of these cases have increased now to 7.5%. I personally was thinking that with respect to these project imports, where these projects are of national importance, there was a lot in terms of exemptions to so many of such projects. There may not have been any change, but I think somewhere the finance minister intends to ensure that the tax buoyancy is maintained. At the end of the day, she will have to collect taxes also from some sources or the other. So she decided to increase the customs duty rate on these project imports to a blanket rate of 7.5%, which means all of these categories of project imports will now bear a tax of 7.5% on the entire project import value. Another interesting change was with respect to the agricultural infrastructure and development cess. And when I read that, in the beginning, I thought that why this cess? Why these cesses? What is the rationale of these cesses? But when I went to the details, I realized that the import value in most of these cases is not increasing because the corresponding basic customs duty has been reduced. So what the government intends from this? Why this new cess? when the duties are collected as duties of customs, these collected duties go to a different bucket. They may go to Consolidated Fund of India. There may be a revenue which gets shared as per the Finance Commission recommendation between the center and the state, and so on and so forth. The government today wants to encourage agriculture sector and wants to ensure that on certain products, this cess is collected and it is used for specific agricultural purposes. And hence, this agricultural cess has been imposed so that the collection on import with respect to certain items is unmarked and used only for specified agricultural purposes. Another change is with respect to the special economic zones. We know for a fact that India was arguing against the US for a WTO dispute by US with respect to these SEZ schemes. And the US said that these SEZ schemes were violative of the international trade norms on subsidies and countervailing measures. India lost to the US. The matter, of course, is in appeal. But we need to overall the system of these remissions of these duties, the exemptions, the entire duty tariff, and hence there was a need to even rationalize these SEZ provisions. So the budget speech mooted an overall of the SEZ Act, and with the twin objective of ease of doing business, the customs administration of SEZs, and make it fully IT driven with only risk-based checks. So I think the intention is very clear to address the global needs, to ensure that today India meets all the global parameters, to prepare ourselves today in case there is a WTO negative ruling even at the appellate forum. And we need to appreciate today and acknowledge and be honored that the GDP per person has crossed a threshold limit by which our country has gone to a different category. Now, if we are now in the category ahead of where we were, we need to address the concerns at the global level. And that's why we have seen that a lot of these duties will now come by way of remissions. A lot of these schemes, ROTTEP scheme, etc., will now come up, and which will ensure that our country, when seen on the global chart, is addressing all such issues which we need to as per the WTO norms. So I think with respect to SEZs also, it's a required initiative which has happened, but I am more eager to see the customs administration, and when they make it fully IT driven, how would the risk-based checks reduce? That will have to be seen for sure. That's more or less from the customs perspective. I have already got certain questions. I will answer those questions perhaps all towards the end, depending on how much time we have. Satish ji has written a question. Srinivasan has written a question. Prince has written a question, and Mr. Gopalan has written the question. So I will address all of those questions in a while. But before we go to the Q&A session, let us understand the changes in the GST regime. Before we go to the changes, and I think one of the bigger change this year is with respect to the restrictions on availment of ITC. How these restrictions are applicable. Now, return to B comes into play. Now, let's understand, because a lot of people here would not know what these returns are. So let's just understand three returns. I'll keep it very simple, but that will help us in understanding. GSTR1 is the return to determine my output tax liability on GST. So for instance, if my output turnover is 100 rupees and the tax rate is 18, I need to disclose the output liability and the tax in GSTR 1. GSTR 2B. GSTR 2B is with respect to the eligible credits. So if I am a business, I will also have certain credits. The credits which are eligible to me will now all be reflected in GSTR 2B. What will be these eligible credits? We will come to in a minute. But this GSTR 2B will give me the credit based on GSTR 1 and GSTR 3B of previous month of the vendor. So we all fill our income tax returns. When we fill income tax returns, there are certain taxes which are deducted at source. And there is Form 26AS for individuals. So you go online, click, and you upload the most recent Form 26AS. In that Form 26AS, you would get the details that who all not only deducted your TDS, but also paid the TDS. And that what is reflected in a statement, you take as a credit for the payment of your income tax. Something similar has been devised with respect to GST. Now, what is this? Is this form GSTR 2B. So it is not only the output liability which is being disclosed by my vendor, but also his final return in GSTR 3B. So he must fulfill two steps. One, file GSTR 1 to disclose how much is this output liability. And that disclosure or computation is not enough. You need to pay taxes in GSTR 3B. So once you do this, let's say my vendor does file GSTR 1 and GSTR 3B for the month of April. This paid and reconciled figure comes to me as a credit in the month of May, because that's the month when he has complied with respect to the output GSTR 1 and GSTR 3B. So it comes to me and I take the credit. And when I take this credit based on GSTR 2B, I file my GSTR 3B, which is the final return, by utilizing all the taxes. So that's the scheme. If we recollect, the matching concept was proposed that you match these invoices. X purchased, Y taken credit, and there must be a matching. Now that matching concept has gone because now we have this simplified version by way of usage of technology by which this automated form gets generated. So this is the entire GSTR 1 to B. Now, the new condition has been introduced in section 16 to provide that a registered person would be entitled to avail ITC subject to certain restrictions under section 38. Now, this section 38 has been now amended. Now, what is this section 38? And we'll go to the separate question of, is credit my vested right? Can I be made liable for the acts of my vendor? If he doesn't pay tax, then why should I suffer? All of those questions will have to be asked, are a subject matter of dispute, will have to test the constitutional validity at some stage. But let's understand today what this 38 section, the substituted one, intends to introduce. Now, what it says is, of course, what I mentioned with respect to 2B, there will be an auto-generated statement which will be electronically made available to the recipient. Great initiative, no problem. Form 2B comes to me, reconcile figures come to me, and based on these figures, tax paid purchases, I get the credit, I avail the credit. Very nice. Welcome. We have no problem. Now, how will it work? Let's understand that also. So, for example, Form 2B, cleanup will happen on a periodic basis. So, for example, in period 1, suppose according to me, I have 100 line items of credits. Out of those, 65 line items are there in GSTR 2B. So these 65 line items are reflecting in GSTR 2B, or I may call it, for simplified version, clean entries. So out of the total entries of 100, I have clean entries of 65. So I take credit for payment of taxes for my GSTR 3B with respect to credit of these 65 line items, and 35 remains pending. So whatever is clean comes to the credit pool, you avail, thereafter you utilize or not, that's your wish, and then the pending ones remain in the system. Then you go to period 2. Period 2, again, you have 100 items, but this time you tell to the vendors that please comply, please improve your compliance. And this time I have 90 clean items. So when I have 90 clean items, I will take credit of not only these 90 clean items, but let's say out of the earlier pending 35, I have 30 more clean items out of those 35. So in period 2, out of my 100 credits, there will be clean items to the extent of 90 for the current period and 30 for the earlier period. So I get credit with respect to 120 line items. The pendency remains only to the extent of 10 line items for this period and 5 line items of the earlier period, which are not clean so far, which have not been complied by my vendor so far. So that's how it will work. Now, the statement, as I mentioned, will comprise of the details for inward supplies and available ITC. That's the clear situation. Now, what are the restrictions? And please note that these restrictions are all applicable on supplies received from my vendor. It has nothing to do with me. And that's where the grievance starts. So for the fault done by my vendor, I suffer. Now, when all do I suffer? If my vendor is a newly registered business, the time period will be prescribed. But in India, it is generally said that if there is a new business, please promote new business. People say, I have started my new business, please take services, supplies from me. But in this case, what will happen? If it's a new business, person may be reluctant or will have apprehension to take services from him or supplies of goods from him because they won't get the credit. So that's the problem. So any new business must take this registration well in advance on a proactive basis so that you do not block credit of your customers. So that's the first restriction. For a new business, there is a problem. Now, what happens? If there is a default in payment by the vendor, that's the second situation. So for instance, if he had disclosed his output liability in form GSTR 1 as 100, but in 3B, there is a mismatch or default in payment, then because of the default at his end, I will be denied the credit. So if there is a mismatch between GSTR form 1 and 3B of the vendor, I suffer. The third situation could be that there is a short payment. Now, again, there will be a mismatch between GSTR 1 and 3B of the vendor, but the difference will be in the earlier situation, he had defaulted. In the next situation, there is a short payment. The default could be genuine. There is COVID in the family, or CFO is not there, or some reason or the other, or tax payment is short by 5 rupees for some reason, error, and you are blocking credit of 5 lakh rupees. So these situations could arise. This is the third situation. The fourth situation is a registered taxpayer availing ITC more than the ITC available in the statement. So which means there is a mismatch between 2B and 3B. 2B was for what? For his eligible credits, like it is for us. He will also have his credits. But if there is a mismatch between his 2B and his 3B, his utilization, it is his problem. Then also the burden comes on to me. Fifth situation, a registered taxpayer discharging the proportion of its output liability by utilizing ITC more than the proportional allowed in 49. So we know that for exempted services and taxable services, there is a proportion of eligible credits. If for some reason he puts a wrong formula or wrong computation and there is an error of 100 rupees, then there could be a blocking of credit to the extent of even 1 lakh rupees. So basically, the arithmetic accuracy and compliance at the end of my vendor will determine my future. And that needs to be tested. Whether that is correct, legal, whether Article 300 capital A of the Indian Constitution comes into play, because credit is my right. Is the government saying today that because of his default, or let's say he creates a default and he doesn't pay, and the government denies me my credit because of these, will the government also not recover money from him? So the government wants to deny my credit and recover money from him, punish me for his fault. So basically, I'm a good boy, he's a bad boy. Just because I'm in company of bad boy, good boy gets punished. That's the situation. So what is important today? It is important that we do vendor streamlining. It is important that we have absolutely proper indemnity clauses. Because there could be situations, there could be two situations. He charges tax, he pays tax, he's out of pocket with respect to taxes, and I become a bad boy of not paying him the consideration. Because I'm a bad boy, it becomes bad debt for him. He suffers because he's out of pocket with respect to the taxes which he has paid. He's not even got those taxes from me, not the consideration, and he suffers. So that's a typical bad debt situation. Now there are payment terms also. I can take the credit only when I make a payment to him. Now imagine a situation, I procure services, I incur the burden of indirect taxes by way of GST on those services. I pay to him as per the payment terms. It is paid to him. I've got the services. So to the extent of services, there is no problem. But I have also paid him the taxes. Now, as per the payment terms, I have paid him, but he has not discharged. There could be a situation wherein there is a mismatch between his Form 1 and GSTR 3B. He doesn't pay, or he short pays, or there's a default, or credit proportional problem. I have paid, I've done my part, but still I suffer. Because it doesn't matter in tax laws whether you're a good boy or a bad boy. If you're in a company of a bad boy, you'll suffer. So what is important is that we have absolutely fine-tuned indemnity clauses. That we have streamlined our vendor. We have clear payment terms. We have clear terms in terms of bad debts. We have clear terms with respect to contractual disputes when it comes to these credit mismatching. And I was discussing with my colleague late last night. We were debating, could India from here on go on to a situation that for all B2B transactions, the tax is paid under reverse charge? Now, what will happen in this situation is, if I have the registration number of the vendor, I pay tax. Based on my payment, I take credit. And based on my credit, I utilize it. So all of this payment terms, bad debts, etc., will go for a toss. And I give him a declaration that tax paid under reverse charge. And that gets reflected in this. It is my duty and responsibility. This will be different from B2C, of course, because at some end, the tax will have to be paid by the person who's ultimately rendering the service to C, to the customer. Because as we all know, indirect taxes are actually becoming part of the government kitty only when it is finally borne by the consumer. So, will that be the next step in several years to come? We will have to see how that happens, if that happens at all. Now, moving to the next issue under GSA, and this credit is very interesting. There'll be a lot of disputes, debates, constitutionality test, and so on and so forth. But now let's go to our next issue under GST. Receiver liable to interest. Now, as per the amendments, the registered recipient would now be required to reverse ITC of the GST not deposited by the supplier, and the receiver is liable for interest as well. So which means that for all what we spoke, it is not only the burden of the tax which will have to be borne, but if I claim that as credit, I will be liable even for interest. Now, when it comes to interest, the question still remains that the government will also recover interest for late payment of these taxes from the vendor, from my vendor. And that's a separate question. That amendment has come, that interest becomes applicable only on availed and utilized. So only when he avails and utilizes, there will be an interest burden. But yes, there will be an interest burden if he doesn't have. So imagine that he doesn't have amount in his credit pool. He pays interest on that. He defaults. Because of his default or short pay, my 2B doesn't give correct entries or the eligible entries to which I am eligible to. I by mistake take tax based on this, that I have made the payment. Then I am liable for interest as well. He is liable for interest as well. Both are liable for interest. Interest rate, that's why reduced from 24% to 18%. And let's collect it from more people. I think this will be constitutionally challenged. The next is with respect to the two-way communication, the matching concept that I spoke about it. That has been removed for a reason, because of this 2B now coming in, and there are appropriate amendments with respect to these. Change in last day of filing returns, availing ITC and correcting errors. There is some extension which has been given by 2 months or something, November, which is a welcome move. Also keeping COVID situation in mind, I think that's a good move. Removal of facility to claim ITC on provisional basis, receipt basis. Section 41 has been substituted to remove the facility of crediting the ITC in electronic credit ledger on provisional basis. This amendment abolishes the concept of claim of eligible ITC on provisional basis. So there is this change which has happened. Cancellation of registration. There are certain provisions which have now been changed. The proposed amendments seek to expedite the initiation of proceedings with respect to these defaults which have happened by way of enabling provision for future rationalization of timelines for cancellation of registration. Interestingly, in some cases, there will be no hearings which will be given and the registration will be cancelled. And there are different set of rules with respect to composition taxpayers and the non-composition taxpayers. So cancellation of registration has become a little harsh. They would go and cancel these registrations. Then there are certain changes with respect to sequential filing of returns. I would not go too much into these compliances, but what is the sequential filing of returns? Sequential filing of returns, Section 37B has been introduced to restrict the filing of outward supplies for subsequent period. So if you have not filed your return for April and you intend to file it for May, you will not be able to file it for May till you file it for April. So it's like a school kid. The teacher says, the first you complete your homework for the earlier period, then only you complete this, so that she ensures that the kid doesn't miss the homework. But there could be certain genuine issues with respect to a particular period. And if he's not able to file that, the default continues even for the subsequent period. And of course, we have seen the provisions with respect to the cancellation of registration. It will be cancelled. Now, there is also an amendment to Section 39(9). And what it says is that a taxpayer would be allowed to file the GSTR 3B for a tax period only upon filing the outward supplies. So, in my example of a kid, if he has not done his chemistry homework, then he can't do his homework of geography. You first have to complete your chemistry homework, then geography. What it says is, the provision says, is that you have to basically first comply that form as well. Now, if there is some genuine problem or technical problem or mismatch problem or whatever problem, then his non-compliance is extended for all others. So it's not like that you miss for one period, but you comply for the other period. If you miss for one period, be a bad boy throughout, and we'll cancel your registration. So I think a little harsh. We need to examine the practical aspects with respect to such restrictions. So while these are good monitoring ways, but may sometimes be very harsh. And I can already see some questions with respect to applicability of GST on cryptos and all. I'll come to that. That's a very interesting aspect. But let me just complete my presentation and I'll certainly come to that. Another change with respect to GST is with respect to introduction of facility of transferring amount in the electronic cash ledger. So if you have amount in your one cash ledger, it's the same registration, same PAN-based registration, you please transfer. Welcome move. There are certain other changes also, and I think because I'm getting a lot of these questions, we will not go into these compliance. In any case, I'm not a compliance expert. Yes, for constitutional issues, legal issues, I'm the right person, but I will try my best to answer with respect to certain compliances also. So I think that's pretty much what was there in terms of what I had to speak more or less. I will skip some of these smaller provisions because we have completed the 1 hour. And now let me take some very interesting questions. Mr. Rohit Goyal asks a very, very debated question and issue with respect to applicability of GST on crypto. And I mentioned in the beginning that the finance minister announced direct tax implications on cryptocurrencies, but somehow there was a miss with respect to applicability of GST on cryptos. If you ask me, according to me, there must not be any tax on cryptocurrencies. Because what are these cryptocurrencies? Are these actionable claims? And if these are actionable claims, then these are neither goods nor services. So I would want to argue that. But yes, I think as far as the cryptocurrencies are concerned today, whether these are cryptocurrencies or online games or casinos, the moot point of debate is more towards the valuation. So will the exchanges be liable to pay tax only on the margin of the Bitcoin traded? Or will the entire value be subject to tax at the full rate? So Rohit, that's the concern. So if the exchange is subjected to tax only on the margin, then his margin becomes taxable and you apply GST rate. Hopefully, looks like, unfortunately, it will be 28% in that category somewhere above 18%. But yes, it must be, if at all, only on the margin roll. My very dear friend, Mr. Sengar, is writing, in GST law, retrospective amendments have become norm rather than exception. And I completely agree with my friend, Mr. Sengar. He is himself a very known figure in market, and we know, Mr. Sengar, that these retrospective amendments must be made applicable in the rarest of rare cases. And can retrospective amendments happen when there is already a Supreme Court ruling? I'm already arguing on retrospective amendments and retroactive amendments with respect to the restrictions of credit. And all indirect tax lovers must certainly read a couple of these decisions on credits, like my Delhi High Court decision on brand equity. Worth reading. How Limitation Act becomes applicable, how Article 300 capital of the Indian Constitution comes into play, whether credit is my vested right. And in the subsequent leg, after winning the brand equity, etc., there is a retrospective amendment. And as constitutional and tax experts, we must know that there is a difference between retrospective amendment and retroactive amendment. And in these situations, these amendments will all be retroactive. And when these amendments will be retroactive, with an endeavor to turn down the decision of the Supreme Court, I will be the first one to challenge the constitutional validity of the retrospective amendment as well. So how to deal with an indirect tax liability imposed due to retro amendments? Sir, I am there. We must file a writ. Writ court is an appropriate forum to address such issues. Narendra ji is asking regarding society, monthly billing 50 lakhs, 20 lakhs billing on builders, not received from builders, paid single penny in last 15 months. Why we pay 18% GST? Say 4 lakhs per month or 50 lakhs per year, no funds, will pay GST when received. And these will remain an issue. And you're right, sir. I think these are more of feelings which you have expressed. And hence, we need a robust mechanism and system today to ensure how contractual disputes with respect to these payments, non-payments, credits, etc. are also resolved. Mr. Gopalan is asking, did section 16 and 38 issues taken with government? What is their view? Yes. I think, Mr. Gopalan, they are very clear that they want to remove the matching concept, wants to have the complete system of auto-generated 2B, like Form 26 AS. These are all being discussed by Revenue Secretary at length. The issue which we today have is not with respect to compliances and accuracy. The issue which we have today is that I am a good boy. I have paid for the consideration for both the goods and the services and the taxes. And why must I suffer because of an act of someone else? Will remain a $1 trillion question. Arvindan is asking, sir, my vendor has not paid GST collected from me. What is the mechanism available to me for informing the department about this default? Good question. Genuine question. You can please intimate the department. You can tell his GST number, tell to the authorities, give them the details of the payment. The authorities will be more than happy to get such information from you because they also have their targets today. It will help them in meeting their targets. But I think before going to the authorities, you must write to your vendor. There may be a genuine problem. Maybe a genuine boy may have been suffered in these COVID situations and so on and so forth. So I think before informing to the authorities, please write a formal letter. And that's why I mentioned that indemnity clauses will play a very important role. Vendor management will become very important. So I think that must be the approach. Prince is writing, MEIS is export-related incentive, where incentive scripts are used in payment of BCT, rightly so. And it has nothing to do with exemption of BCD and SWS. What's your take? Prince, I am arguing these matters in several courts. I completely understand what you are saying. Is this an exemption or the duty paid being knocked off? And hence whether SWS must be nil, because now today we have a circular with respect to the advanced authorization licenses. But what happens with respect to MEIs? That I think only courts will decide. Our writ petitions are already there in Gujarat, Chennai, and Bombay. See, what happens is these scripts are basically used not to pay, but to get waived with respect to these imposition of taxes. And if you read the language of the notification, it uses the word aggregate duties and so on and so forth. Now the aggregate duty becomes which becomes payable becomes nil because of the usage of this script. And hence the same argument that any percentage applied on 0 is 0. So that's my view. Of course, we'll have to wait, Prince, for the courts to ultimately decide this issue. Mr. Gopalan writes, what happened in case SWS is already paid on exempted customs duty? Sir, please file refund. Any wrong payment of duty is eligible for refund. Anything which is not duty or is unconstitutional is also not subject to the period of limitation. Mafatlal and others. So we must see the facts, the date of payment, and so on and so forth, and whether I could claim that by way of a normal refund, or will I have to go to the writ court to get my money back. Now, Gopal is writing, what happens to the SCN issued already quashed by the honorable courts and tribunals? I think this is with respect to Canon India. SCN already issued, which is quashed by courts. It will depend which court. It will then depend whether the matter goes to the Supreme Court. It will also depend on the timing when the matter gets heard, because by that time, is the bill enacted? It will also depend on how well you argue on the retrospective amendment proposed by this bill. So I think from that perspective, the SCNs already issued, I personally feel that the chances of success by challenging these retrospective amendments, and retroactive actually, this is retroactive. And we need to create that. And we need to, of course, argue on the fine principles of applicability of retrospective amendments on rarest of rare cases. Hayden's rule, mischief, deliberate usage of that provision to take undue advantage. And intention of the government comes very last. Now, a lot of people say equity doesn't work in tax. But I have argued about 50% of the petitions, because I argue with my heart first. I feel that law is logic. And once you apply logic, and logic is nothing but equity, law will come, of course, legal principles will come. But logic has to apply. So, what is Article 14? Arbitrariness is what? Logic. I ask that question to myself when clients come. That what he is saying, forget law. Is this guy making sense? Has he done best to his ability? Is he genuinely aggrieved? Is certain part of the provision actually vague? So doctrine of void for vagueness, can it come? Is it arbitrary? No intelligible differential. Compare. And that's how Article 14 comes into play. So I think this will be a good one to argue, Mr. Gopal, for SCNs issued prior to this. It will be a certainly good one to argue. Satish ji is asking, who has the power of issuing the summons? Satish ji, you have raised $1 billion question. Such a pertinent question. I will answer at length. And also at being issued from far away locations. Absolutely. Now, Satish ji, lot of people today are being issued these summons. Senior intelligence officer or superintendent, etc., issue these summons. And our businesses get perturbed. Summons, applicability of IPC provisions, CRPC, and so on and so forth. The first and the foremost question is, what is the need to issue summons? Is there a need to issue summons? To whom summons are issued? Now, when we talk about need, is there a case of non-cooperation that you intend to invoke IPC provisions? Why do you want my MD or senior management to appear? Then what is the role of chartered accountants and advocates? Why can't my authorized representative go? What is the frequency of issuing summons? 3 summons in a week. And last but not the least, the person who's issuing the summons, has he got the powers? Why do we have hierarchy? Why only an IRS officer in his first posting becomes assistant commissioner or equivalent? Why he doesn't work as a superintendent or SIO? That hierarchy has to be acknowledged. And I am arguing these matters in about a dozen of courts with respect to some. You issue summons to foreign directors. But why? Is India director not able to satisfy your queries? In COVID situation, will my foreign director fly from there and come here? Is the intention to issue summons is to just take coercive measures and recover money without fair process of adjudication? That is of utmost concern. And we have got some dozen of orders from different courts with respect to these summons. So I think, Satishji, to answer you, one must check the legality of these summons from different aspects: jurisdiction, territorial jurisdiction, need, frequency, to whom, by whom. Are the guidelines issued by the board being followed? Can authorized representative go? Can advocate accompany? Can it happen virtually? Why must my foreign director come? And why must I travel from Mumbai to Chennai? DRI has presence all over. Please transfer file. It's just increasing carbon credits by making me travel. So I think there is more food for thought. But I think overall, the efforts of the finance minister, the GST council, and the industry must be appreciated. Because finance minister and the GST council have taken some good decisions, timely decisions. And some of these other aspects, when left in the hands of the executive, there are different interpretational issues because of which these situations arise, because of which this problem arises. Now, if India has to grow at a rapid pace now, we need to ensure that the ease of doing business is improved. We need to ensure that our MSME sector is encouraged. We need to ensure that while the tax buoyancy may increase, there must not be tax terrorism. We must ensure that Article 21 is protected. We must, in fact, ensure that all the provisions of the Indian Constitution are protected. And on that note, I thank all my viewers, and be safe, stay safe. Thank you.
Thank you, sir. That was an insightful session. Quite in-depth analysis of all the tax provisions which has been brought in by the budget. I would like to also thank all the attendees and Taxmann to host the present session. Have a great evening, everyone. Thank you.